Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Go ahead and hit that like, subscribe, notification bell. Greatly appreciated. For those of you that's been rolling with me for a while, just hit the like button. All right, let's get it going. Let's get right into it. So today, let's look at what's going on, some of the key drivers of the market today, right? And then we'll talk about some things in the midterm. Okay, so let's go here. All right, S&P 500 is a little change as traders weigh new Powell comments. Live updates. Powell was talking today. And let's just read a little bit here. The S&P 500 was a little changed Wednesday today as traders digest the latest commentary on the pace of the future monetary policy from Fed Reserve Chair Powell, right? So things kind of fell apart a little bit. He was talking at the ECB conference, and here he is right here. As a matter of fact, if you don't mind, let me see if I could get this to play for you guys right now.
You didn't raise rates at the last meeting, especially, I think it was a surprise. And you're not calling it a skip. Paused, but you're not calling it a pause. And you're not calling it a skip. So what are we calling it?
Well, first of all, Sarah, thank you. And Christine, thanks for hosting us here in Sintra. So what we're calling it is maintaining the level of the federal funds rate at its current level for this meeting. Thank you. And we did that. If you think about it, we've raised the federal funds rate by 500 basis points since a little more than a year ago, and we think so. We've come a long way. We also think that there's more tightening power coming through. Really, policy hasn't been restrictive for very long. We started at negative real interest rates, and we've now moved up to where we actually are in restrictive territory, but we haven't been there very long. So we believe there's more restriction coming. And what's really driving it, to Andrew's point and Christine's as well, is very strong labor market. We've got a labor market that, where jobs are being created, there's strong wage gains, and that's driving spending, driving real incomes and driving spending, which is driving more demand and continuing to drive labor market. So the labor market is really pulling the economy. And my colleagues and I, as you will know, wrote down in our SEP 2 more additional rate hikes. The median was quite a strong majority, actually wanted 2 or more rate hikes. And the reason for that was, if you look at the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
So someone commented once that, I said that the Fed's job right now is to cause high unemployment. And they said, that's not the Fed's job. Well, it is right now. You just heard it. Because if we have a strong labor market, you got cash, in your pocket, you got money in your banks, and you got spendable balances or credit limits on your credit cards, you're going to do just that. You're going to spend, causing inflation to what? Yet spike. He just told you some of the problems that we're having is inflation is still high. It's been cooling off, but it's still high. All right. And so there's 2 more rate hikes that are still on the table. The market really didn't take too well to him saying that, though. The market already knows this. He said it before the FOMC meeting. He said it before CPI data came out. And then every time he says it, every time he repeats it, the stock market still don't like to hear it, and it still reacts negatively. Okay. So right now, even with good housing, the Fed's job is to cause, he would like more unemployment. Let's just put it that way. Because if we have higher unemployment, he will feel confident enough to not increase interest rates. Follow? That's how it simply works. Okay. Let's take a quick look at crypto. As we can see, our favorite crypto, Bitcoin, is kind of where it was this morning. All right. Everything is kind of where it was this morning. Polygon is tanking a little bit. Cardano is tanking a little bit. All right, that was it for crypto. It's just kind of flat. For those of you that think that that's bad news, that's not. That's a good day for crypto. Trust me when I tell you that's a good day for crypto. All right, let's look at what's going on at the time of recording this. At the time of recording this, we got the Dow, the S&P, and the NASDAQ. The NASDAQ is the only thing that's green, good people, right? So the Dow is down, but not by much. And the S&P, not by much. So, I would say neither the bulls or the bears have this day. I just say it's just a flat day. We'll take it. It's not really bad, especially when the Fed is bumping his gum, running his mouth, okay? Before we go any further, people, I'm telling you we have hours left for you to get your free stock. Hours, okay? I got the wrong window up. We got hours left for you to get your free stock. As a matter of fact, you could literally deposit $100 and you're going to get it right back with a coupon, $100 coupon. Then you're going to get over a $30 stock on top of that, plus 5 other free stock. But we got hours till it runs out. Okay, we'll keep it going and talk about something else. Let's look at what else is happening that is good for the market. Apple stocks hit an all-time high, putting the tech giant on the brink of a $3 trillion valuation. Wow, $3 trillion with a T. Look at that, good people. Wow. And cementing its status as the world's biggest company. All right, that is the company called Apple. As we look at Apple today, we could see that Apple is still a monster. Look at that. Even today, it hit an all-time intraday high. So about right there is when we hit an intraday high. And Apple, like I said on yesterday's video, to me is a key indicator stock for the entire stock market, right? Let's look at some more big tech. Let's look at Tesla for the day. Look at that. And let's look at NVIDIA, right? Because NVIDIA is leading the C3, the AI. I was going to say C3 AI. It is leading the AI charge. But as we could see, NVIDIA is the one that's cooling off. Tesla is still up today, and Apple is still up today. Remember, the Mag 7, there's 7 stock that's pretty much holding the entire stock market up right now. Some people think it's a bull market. Some people think it's a bear market. Some people think it's a bull market trap, right? A bull trap. Some people think it's a bear trap. I say I'm just simply trading the market that we have. Trade the market that you're in. I entered into a couple of, as you guys, I mentioned this morning, I entered into a couple of Tesla plays and got in, got out, made a little money and got out, right? At this point, even with options on Tesla, I'm not holding anything overnight. You do what's best for you and I'll do what's best for me. Okay, so I just wanted to come in real briefly and make sure you guys were up to date on what's going on. I know you guys are at work, and we must. I would just suggest to not get overzealous. I would not get overzealous right now because that's how traps really happen. On tomorrow, I'm going to talk about how we are looking at the S&P. And historically, there is a cap before we kind of cool off. I'm not going to say fall, kind of cool off, right? And so anything could happen, right? So this is what I wanted to show you guys here, right here. All right, I was on the wrong window. Make sure you deposit $100 and look, you get it right back. Plus you get that C3 AI, what I was talking about, and then 5 more stock, okay? I don't care if you got 15 different brokers. Make this one so you could double your money right away. You and every adult you know that is over 18, okay? And that's it, good people. I'm going to leave it right there. You guys leave me a comment And, let me know what you think, because this is the magic question. Are we, because of what the Fed is saying, the threat of the Fed, right? And some people think that we will not have a recession at all. You guys let me know where you think we are. Is this just a bear market bounce? Is it being propped up by AI, which I believe most AI will fail, right? Everybody's going to be AI right now. I mean, like I said, you could have a hamburger right now and they'll say it's a AI infused hamburger, right? But at the end of the day, most of the quote unquote AI plays will fall. That's why I believe in big tech, because I believe that big tech will be the winners of AI, artificial intelligence. That's what I truly believe. So yes, I'll play these smaller plays, for now, but I'm just taking my winnings and yet rolling it over into big tech. Yeah, big tech is frothy right now, but I'm just holding my cash until some of them cool off. Okay. So you do what's best for you. I'm doing what's best for me. But the question I want to leave with you guys on today's video is, are we going to have a recession between now and the next 6 months, let's just say, or no recession at all? Are we in a bull market, or are we simply in a bear market bounce? I will say I do not believe we're in a bull market, and I will not put all of my money into this market. Now, remember, anything I say is not a suggestion for you to buy, hold, or sell. This is not Get Like Me. You let me know what you're going to do and what you believe. And I'm telling you that as for me, I'm going to continue to make money, but I'm going to continue to hold money. All right? Make sure you check out all of the links below, and I will see you guys in the morning. Okay? Live, love, laugh, and learn.